And often Rainer has mentioned the fact that we're making quite an impact on markets and changing people's lives. And sometimes we can get a little skeptical. But the more I went through this presentation, the more I saw that actually, we are making a difference, and we are changing we have changed many markets, and we're going to change even more. So that's pretty much what I'm going to cover today, and particularly thinking from the perspective, if you are a bank in a market where a credit bureau is being introduced, what is the impact of that, and what is it going to mean to you as a financial institution in terms of what you need to do and how you need to react to the situation. So I'm going to talk a little bit about background to start with. So if we think about the access to finance and where people have access to finance at the moment, we can see that it's it's very high levels of access to finance in the Western world, and as we go further east and further south, less access to finance. And so there is quite a number of markets where access to finance is difficult, and people are unbanked. And those markets are actually very similar to where the private credit reporting is. And so, we could say whether it's cause or effect, but certainly the more we look at it, we know that those markets where we are introduced private credit reporting, we're going to make a big impact on the access to finance over time. So I think everybody should be aware of what credit bureaus are, but just to think about the two ways when we are implementing credit bureaus at the moment, how the two types of approaches that we may be taking. So the first is pretty much the classic option where financial institutions will be sending their data on a regular basis. That's passed to the CRB, the Credit Reference Bureau, and held in the database. Then the subscribers, the users, will make a request, and the Credit Reference Bureau will actually send a report to those individuals about the individuals that are applying for a loan or they wish to review in their current loan book. The other option, which is the one that is currently in Tanzania, is slightly different, and this is where the data is passed to a central data bank first, and then shared out to the credit reference bureaus. And so all the data is sent to one single data storage and then passed out. So each of the credit reference bureaus have access to the same data, and there the customers will choose which credit reference bureau to go to, dependent on the pricing, on the products available, the service, etc. So that's the model that is used in Tanzania at the moment. Okay, so we know that there is a problem of access to finance, and we know that credit bureaus looking like this could be the answer. So the presentation is really, in summary, going to look at 4 of the key market changes that will occur after the introduction of a credit bureau, and more particularly, why financial institutions need to adopt a credit bureau and the automation if they're going to grow their market share. And I'll illustrate afterwards through looking at Georgia. So imagine we're going to introduce a credit bureau into a new market, and then we're going to think, what's the situation if we introduce it today in 2014? What's the market going to look like in 2019? So effectively, we're going to look at the future, look at our crystal ball, and try and gauge and see what's going to happen. And think about if we had a bank or a microfinance institution today, what are the things that we need to think about, because when the market changes, because the credit bureau is going to be introduced. Just before we I move on to that, one of the things that often is that the existing institutions will often underestimate the change of a market. So if you think about not just in financial services, in any area, can you think about any markets which have had significant changes in the recent past, and where businesses, can you name any businesses that have not reacted to those changes and therefore actually disappeared from the market or suffered hugely? Anyone wants to write in the chat box any ideas on that?
You could come off mute as well and just tell Paul.
Any ideas of any companies in the last 10 years that have suddenly been market leaders, gone from the hero to zero in a couple, 2 or 3 years?
Nokia.
Nokia, that's good. So everyone went to smartphones and Nokia didn't go. Any others? BlackBerry or Kodak? So when markets change, it's important that companies adapt to that and actually change as well. Otherwise, there can be serious consequences. And certainly, I think many financial institutions underestimate the impact of introducing credit bureaus if they want to really stay at the top of the game. So when if we think about the change that's going to happen between our introduction today of the credit bureau and what's going to happen to the banks and microfinance institutions over the next 5 years, typically there will be nearly all of them will be benefits. They will all see increases in their businesses. However, some will see bigger increases than others. Some will grow more than others. So it's important for those microfinance and banks today to think about what is it that they have to do if they're going to be one of the big winners and not one of those that are growing small or perhaps even suffering as a result. So they need to think about the different areas where they're going to see changes. And typically we'll see four areas of change. One will be in the product ranges. Second will be in the actual volume of total loans, the pricing, and also we'll see competition and new entrants come into the market. So let's run through each of those 4 areas and look at them in more detail. So if we think about the products and the collateral side, when I'm talking about products, I'm perhaps talking about the difference between secured and unsecured as well. So if we think about in a market without a credit bureau, if we look at the typical expected default rates and we're looking at the graph, you can expect the highest default rates to come from unsecured loans. Then if you have a guarantor, perhaps have to mitigate the default rates a little, all the way down to perhaps having some sort of assets or salary deductions. And so typically those in a pre-credit bureau environment, only secured loans could actually be profitable because it's almost impossible to charge interest rates to actually mitigate the risk of an unsecured loan. So if we look in lesser developed environments without credit bureaus, most of the lending is secured, or at least there's a salary deduction at source, which is a form of security. Why is that? Well, if there's no way to identify the bad payers, if we don't have a credit bureau, everyone looks pretty much the same. So it's very difficult to distinguish those people who are likely to be good payers and bad payers. So we might expect anything up to a 50% default rate unless we're asking for some sort of security. However, with the credit bureau, we can start to identify the angels and the demons. So we'll start to actually filter and only identify before we offer the loan without asking for any collateral who might be the ones who have got a good approach to credit, good willingness, can understand how to manage their credit finances. So afterwards, if we go back to the same graph as we were looking at before and look at those products, we can see that in all categories, once we have a credit bureau, we can expect lower default rates. So we see that still the unsecured are higher risk than those with a secured deposit or a real estate security, but we can see the risk has considerably fallen. So what if we look at if we used to be able to be profitable to offer loans secured on movable assets or salary deductions, we can now see that our unsecured loans are getting to more or less the same default rate. So what used to be a totally unprofitable and unfeasible product to offer, the unsecured loan, we now see it starting to become a feasible option to offer in the markets post-credit bureaus. So that gives my first prediction of what would happen between today and 5 years hence, is we'll see that unsecured lending in our market where we're introducing credit bureau will become an acceptable and widespread approach to lending. Secondly, if we think about any market, not necessarily a developing market, but any market, you know, if we think about the people who would like to have a loan, if we think about the people who would like to have a loan, we think, you know, how many of those will actually have an acceptable collateral today? Probably relatively few, because those ones who have got good collateral probably less likely to want a loan, and there are many people who at the moment have not got the right collateral. So suddenly, once we remove that restriction that you must have an acceptable collateral, we've got a whole broader group of people who we can start lending loans to and providing consumer loans. So suddenly we enhance the potential customer base hugely. And so a greater number of people that do not have access to credit today will have access in 2018 and 2019. And so that will grow over the period of when we have once we've installed the credit bureau. So that's my second prediction, is the volume of consumer loans grow considerably. And not just consumer loans, also small business loans. So that's the we'll see a change in products, and we'll see a change in the volume of loans. Okay, one of the big fears of markets before credit bureaus are introduced is that it will give the opportunity for new entrants to come in, and that's true. So we will see that over time, between 2014 and 2019, those first 5 years, we'll start to see new new entrants, financial institutions enter the market, because there are those financial institutions who will only work in markets where there is a good credit bureau. So that is a risk for existing financial institutions. However, you normally have a 2 to 3 year gap before any new market players come in. So for those who are fast adopters of using credit bureau, those who do move to automation the quickest actually have an advantage over any new entrant, because they know the market already, they're installed, they have a brand, and so it's important for them to move quickly, and so then they will be in a strong position once we see new entrants come into the market after 2, 3, 4, 5 years. So, yes, the prediction is that new financial institutions who know how to use credit bureau will come into the market, but probably not for 2 or 3 years. Okay, so hopefully there's some economists out there who perhaps can probably talk about pricing more than I can and know a little bit about supply and demand. In the first few years, we'll see that there is we know that there is a latent demand for consumer credit, or for credit that is not supplied because of the need for collateral. So that demand will be there, and in the first years of credit bureau, only those who adopt and adopt quickly will actually have the supply. So there is this huge latent demand for credit, but the supply is low. Therefore, the banks that actually can deliver and the financial institutions that can deliver credit in the early years will be doing so at a premium price. So again, a big incentive for financial institutions, if they are going to adopt credit bureau and automation, to do it fast, and therefore they will see their default rates fall, they will see new products being able to offer, and still at a premium price. Then over time, we'll see that the demand obviously stays the same, but we see supply increases. So if we look at Ukraine over the last 2 or 3 years, we've seen supply increase quite considerably and prices fallen. In Georgia, we've seen the price fall as the supply increases. So as we see the whole market change and we see new entrants coming in, yes, there will be pressure on price to come down. So again, first adopters, premium prices, maximize profit. So the fourth prediction is that first adopters will have a period of higher pricing and revenue and profit. They'll have a little bit of higher risk as the credit bureau fully matures, but there is that opportunity. And even over the medium term, they'll still, if they've adopted, they'll still have higher customer base, they'll have greater knowledge, and they can continue to maximize profit. Okay, so those are 4 of the predictions that will happen to markets where we introduce credit bureaus. And as well as being very good at predictions, I can, normally when I'm in the market and I'm making this presentation to a market where we're just introducing credit bureau, as I did recently in Tanzania, I discovered that I had another superpower, and that was of determining what the people in the audience were actually thinking in these new markets. And often, one of the comments that I often get is that, yeah, credit bureaus, it's okay saying that, but it'll be true for Western markets, but things are different here. We're in Africa, or we're in South America, or we're in Central Asia, or we're in Eastern Europe. It's not the same. But then we look and we say, yes, each market is different and does have differences, and not all markets develop in exactly the same way. But if we look and we see the changes that happen, certainly during my working career, when we introduced credit bureaus in the UK in the early days of my career, in the late 80s, there were a lot of skeptical people that positive credit bureaus would work then. And then the same if we look in South Africa or in Korea, where I was in around 2000, more lately in Ukraine and Georgia, a lot of skepticism. But we still see that the same processes, the same changes do occur in the 4 areas of the products, the volumes, the pricing, the new entrants. All those come true in each of those markets. And I'm sure that they'll continue to happen in new markets as credit bureaus are introduced. The second thing people think that say, yeah, but no, we'll think about it in a couple of years, there's no rush, our data's pretty poor at the moment, we're not going to rush into anything, it's not necessary. On the data side, yeah, data's not perfect in a lot of those countries, particularly at the beginning. But data's not perfect anywhere. This is from a survey in LinkedIn. So in one of the groups for credit bureau professionals. The question is, what is the top most faced issue in credit bureau operations? 65% say data quality. And the majority of people who answered this were not in Tanzania, were not in Ukraine, were not in Lithuania. The majority of people who asked this were in the US, so the most mature credit bureau market, and still they're concerned about the data quality. So the issue here is that data quality is a constant battle. It's a constant challenge for us all, and each credit bureau has to have it on the top of the list. However, even credit data that has got many problems is still valuable. Will still make better decisions than having no credit bureau. So if we look in here with an example, I pulled a report from one of our credit bureaus, and here we can see, if you look in the monthly snapshots, you see there are a number of snapshots missing. There's some missing data there, but still, even though there's problems in the data in this credit bureau, we're still getting millions of inquiries every month. So there is value in the data, and so it's important to use the data that's available today, make better decisions, be the first, if you're a microfinance or a bank, to use that data, to maximize the data and continue to improve it. And therefore you'll get the benefits and be ahead of the market, as we talked about before. So let's look at how each of these factors happen in Georgia. So some basic facts about Georgia: makes great wine, great food, all the key things there. It's if we look at it's not very clear, but the graph in blue, so it shows that Georgia is at the lower end of GDP per head for countries in Central and Eastern Europe and Central Asia. So not the biggest economy in the world, but still, let's go through the story of introduction of the credit bureau. So for those who are not aware, so Creditinfo Georgia next year will have its 10 years anniversary. Started with negative data and positive since 2007-2008, owned by both the banks and Creditinfo. So we can see, if you remember that we talked about it going positive in 2007-2008. So if you look at since the point of going positive, the number of contracts added last year was 2 million, which was twice as many that were added between 2011 and 2012. So, because if you can see that in 2012, 4 million, 2013, 6 million contracts, so an increase of 2 million between 2011 and 2012, 3 to 4 million, an increase of 1 million. So there is considerable growth in this market in terms of the number of loans being granted, and an ongoing increase since the introduction of the credit bureau. And similarly with the number of inquiries, again going from getting higher and higher all the time. A slight fall for the sort of combination of the war and the Russian invasion and the crisis in 2008-2009, and so, but other than that, a continual increase in the number of loans. The number of inquiries into the database. So that shows certainly there has been the increase in the activity and the broadening of the availability of loans to a wider population, as one of the predictions was. We also see there's been new entrants. So if you look, the number of banks who are contracted has increased, number of microfinance has increased considerably. One of the most recent introductions was for finance, who are well known across the Baltics, came in and suddenly making huge volumes. So again, the credit bureau will allow new sophisticated lenders who understand how to use credit bureaus into the market. But for those but it usually happens 4 or 5 years after the introduction of positive data. And that's what's happening here. We can see the big increase in the number of lenders, particularly on the non-bank lenders under the microfinance indicators here. So a broadened number of lenders providing typically consumer loans, but the existing lendings, the existing banks have had time to adapt if they've had the motivation and the foresight to do that. So this shows the overall changes, and so we can see that if we look at the final column here, so this is showing the loan portfolio growth, and it's showing the total banking sector, and it's showing one of the lenders, the Bank of Georgia. So if we look at see the change from 2005 to 2012, we can see the total banking sector has grown by about 5%. Five times, not 5. Whereas the loans to individuals has grown by 7.5 times. If we look at Bank of Georgia, we can see, so the first thing is that there has been an increase in, big increase since the introduction of the Credit Bureau, and particularly for a greater increase to loans to individuals. Secondly, we can see the total within Bank of Georgia has grown considerably, more than the total banking sector. But if we look at that bottom number of the 20, the consumer loans to individuals, so we can see that's been a huge increase and much bigger than the average. And that bottom row shows the number of loans, whereas the Bank of Georgia total loan, the penultimate row of 11 times increase, shows the value of loans. So also we're seeing a lot more loans of lower value. So again, illustrating the change in product type, smaller unsecured loans are now feasible where they weren't before. The other factor this shows is that some banks are growing more than the overall market, taking more market share. So this again emphasizes those banks that react quickest, that react in a sophisticated way, move to automation, will actually take a greater share of the market once the Credit Bureau is in place than those who are slow and don't make the changes. Okay, so the deduction from the last two lines is smaller, low-value loans that have been in the increase. So what the changes that will happen will be in the product range. So we saw that smaller unsecured loans, which weren't available in Georgia in 2005, are now available. And the volumes have increased considerably. The pricing I didn't illustrate in Georgia, but the pricing has also fallen as competition increases. And as we see with organizations like Core Finance, there's new entrants coming in, but they don't come in till 3 or 4 years afterwards. So the incumbent financial institution have that opportunity if they have foresight, if they have initiative to actually make the changes and introduce new processes. Those that are slow will either die or won't get the increases of the others. And even this change of new entrants was very visible even in terms of the UK in the 1990s. We saw a lot of American credit card entrants come just after the positive credit bureaus, using the data in another way, and took all the credit card customers from the incumbent UK banks. So if your bank is going to be a winner and adapt to the changes, they need to adapt quickly, they need to introduce automation and really think about the changes to the market. But overall, the good thing is those are positive changes to the market in that we're actually changing those markets, bringing in Credit Bureau, we're widening the access to loans. So potentially, if we look at Georgia, there's possibly 2 or 3 million people, a million people who have got access to loans now that didn't have access to formal loans 5 years ago. Similar in Ukraine, where it's probably more like 8 million people. So we do make changes, we do change markets when we introduce Credit Bureau. Okay, so that's the presentation. Only half an hour, nice and quick. What questions do you have?
Paul. Paul, do you hear me?
I do indeed.
Okay. Do you have any statistics or at least a vague idea about write-offs or non-performing loans, the development in Georgia, for example?
No, not immediately. I would say that well, one of the things, if we look in a different market, look at Ukraine. If you remember that before the crisis, the liquidity crisis of 2008, there was huge non-performing loans in Ukraine because of, and particularly on the mortgage side, because of irresponsible lending and not using credit bureau. And then after the crisis, when lending started again, everybody was using the credit bureau. Much lower levels of losses. Rainer, were you thinking of a particular, what was a particular angle that you were interested in?
Yeah, my guess was that the bank would wander back. Okay, this is fantastic. We can grow, but will it ultimately make us more profitable or not? Can you prove that? That's the angle.
Yeah. Yes, we can. Can we prove it? Yeah, I think yes, we can on the particularly on the consumer loans. Yeah, we can demonstrate that the purely on reduction of losses, it will if you can increase your book with profitable loans, then it's bound to make you more profitable. So at the moment there are swathes of customers who they wouldn't even provide loans to. So by giving profitable loans to those individuals, then they're increasing their profitability, given that they on the basis they have the equity to lend them.
Thank you.
Paul?
Yes?
Hi, this is Seth. I have a question. Could you give us some comments or speak a little bit to, you talked a lot about early adopters. Could you speak to the fact that some of these early adopters have issues related to competition when they say, well, if I share data, I'm nervous about my competition seeing that data, etc. Could you speak to that and maybe some of the ways to or objections to that or ways to address that?
Yeah. So I think what I have said here, and we perhaps don't say in every presentation, depending on the stage of the development, is that having positive or even negative credit bureau will mean that competition increases, and because it's a safer place to lend, and if you are a dominant player, then you've already got a database which effectively acts as some sort of internal credit bureau. So you could argue that you've paid for your learning there, and therefore you don't want to share information to give others a chance to come into an easier chance to come into the market, which is to a certain extent true. If for those who we're actually introducing the credit bureau is introduced, then the argument is stronger that there's going to be a credit bureau, and therefore if you are lending it, we see there is always a fear about people stealing customers, and I must say a lot of the majority of time that's a much it very rarely happens. We are aware it happens on a few occasions, but tends to be in relatively small numbers, not on a mass basis. And in the end, I think the benefits far outweigh the risks in terms of the access to other people's data and even for most individuals, they will have many individuals will have lending with multiple lenders over time, and it's important to see that the full scope of lending of both your internal customers and also new customers. The other thing is that we mentioned here is that, you know, in Georgia, if we see that the loan market has probably doubled. So on their own, those institutions, if they sit out of the credit bureau, they're not really going to be part of that that doubling of the market. So they may be the biggest at the moment, but when the market doubles, someone else is going to take that that other share. And so that's probably the strongest strongest argument is that if they want to be part of not the size of the market today, but the size of the market tomorrow, they need to be part of the credit bureau.
Thank you, Professor. Yeah, I just wanted to briefly, it's Rainer, up to what Paul was saying. In many cases, I think that's where Seth is coming from. Many cases, a dominant player in the market will try to prevent the credit bureau from happening because of in reality, competitive reasons. But an additional good argument I find is that, to what Paul was saying, is that in the history of credit bureaus and banks working together, I'm not aware of any single bank deciding to starting to work with a credit bureau and deciding that they would prefer not to. And that's perhaps the biggest recommendation for using the credit bureau. No one ever stops out.
I think we've got an example of that at the moment when in Malta, where the HSBC is you know, on one hand, you know, in every other market in the world, it's you know, sharing data in credit bureaus and saying that, you know, very important aspect. But in Malta, where they've got 50% of the market, you know, they're blocking the introduction of the credit bureau. Irresponsibly, you know, destroying the prosperity of the poor people of Malta.
Correct. Javor, I think I interrupted you.
No, I just said thank you from the name of Ted because he asked the previous question. He's sitting not far away. Hello?
Sorry, yeah, I didn't understand.
I just said thank you from the name of Ted.
Okay.
Simon, we can't hear you, I'm afraid.
No, I think any other questions from anybody else?
Oh, probably one question from me, if I can.
Sure.
Since you have experience with Experian, what are the new trends in improvement of credit bureaus in Experian or for all other bureaus? Are they using new approaches for, I don't know, social networks or telecom, checking, fraud prevention?
Okay, what I saw released recently was a move to more real-time access to the data. So particularly as a result of increase in payday loans, which are, we see changes in less than the monthly cycle. So in the UK, over the last month, two of the credit bureaus have announced real-time updates. I'm not sure, I haven't investigated too much how much that is widespread or just on certain triggers. And then probably there's not too much going, I would say, going into for the mainstream credit bureaus into social media, but then there are other looking at other data sources such as going into the salary accounts, and we had, which was the talk, I think, 4 or 5 weeks ago, or 4 or 5 months ago, it might have even been now, from, what are they called, the American guys?
Microbuild.
Microbuild, yeah.
Microbuild.
So microbuild. So where you have secondary organisations looking at, rather than holding the data, going to collect the data on a per request basis from either somebody's current account, from somebody's utility bills, etc. You know, particularly where they are not legally allowed within the credit bureau. They can be, if somebody hasn't got credit bureau records, they can go and get those information. In Africa, there's been a lot of talk about using information from prepaid phones and money transfer wallets in phones, but you know, it's really yet to be widespread, widespread use of that information.
Thanks. Paul, can you hear me? Simon here from Malta.
Hello, Simon.
Hi.
Did you enjoy the rugby at the weekend, Simon?
Oh, you have to say something. You know I did. It was bloody horrible. But anyway, we've got the whole team here. And Paul, one question I'm interested in, you mentioned HSBC here. One of the other challenges when we're talking to central bank here is the little banks is the coverage, i.e. what's the point, as we're only 2% of the marketplace if the big boys aren't playing. And when you said any examples of that in experience that I could use as arguments, as in, well, you know, you've got to start at somewhere because the coverage is obviously always going to be low at first until it builds up.
Yeah.
You there, Paul?
Oh, can you hear me?
I can now.
Okay. If we, if in Ukraine, if we look at Ukraine, a good market that we're all familiar with, there are three different credit bureaus, and largely up until probably last year, nearly all their databases were independent. So there wasn't the same organisations sharing data with the more than one credit bureau. But still, institutions found it useful to access, and they paid money to access the credit bureaus that perhaps had coverage of a third of the market. And you know, we can look at the stats and we can see that actually that reduced the default rates for those organisations. You know, so there we have, if you could get 25-30% of the market, which was the case if you look at each of those credit bureaus independently, it was still being useful. If another example would be, say, in Latvia, where the non-banking institutes have, I think 3 or 4 of them were sharing with Creditinfo Latvia, and if we look at those as a representation of the whole lending market, they're perhaps only 20-25%. But still, they found it useful to share information and take credit reports, even though it's perhaps only 20% sharing. So there are many cases where, even within the Creditinfo, where we've had coverage that is significantly less than 50%, but still there's been a huge value to those users.
Thanks, Paul.
Okay, so we had a question has come up on the list, on the chat. What can Creditinfo do to nudge lenders to improve data quality? Was the question. And yes, as we said, that data quality is one of the lasting issues forever. I think there are. It's harder to. I think one of the things is to demonstrate the problems and to keep going back to lenders and encourage the sense of shared responsibility. Depending on which market it is, one can try and use the regulators or the banking regulators, even if they haven't got direct responsibility for the credit bureaus, they still have an interest in quality data, and the banks providing quality data as reflects on the banking institutions as a whole. Once you've got a reasonable level of maturity, and then you can and the customers are tied into using the credit bureau, at that point it's much easier to threaten non-access if the institutions do not improve the quality of the data. And so that was something that Sandro did in Georgia recently. He wrote to some of the worst offenders and said if they don't make those improvements, then they will be not have access to the credit bureau, and that soon accelerated the process of improvement. But I think in the early days, it's much more a case of demonstrating the problem and working with them to find solutions. Okay, so thank you very much for attending today.